Hey, I want to take some time to talk a little bit about where are we at now and where are we going. Now, a lot of times when I do these videos and these talks, I like to have a video that might not be really time sensitive, but in this case, I am going to make it time sensitive. It is May 2022. I think we're going to talk a little bit about where are we at right now with the market and what's going on, and where do I think that the market is going to be going here forward. This information we're going to cover is my personal feelings, my personal thoughts, what I cover with our clients, but I don't want you to make any changes to any of your personal investments until you sit down with a professional or have somebody take a look at where you're at now to make sure that it's in tune with exactly what you're trying to accomplish, not just with the basic information that I'm covering here today, okay? All right, so let's take a look at this. How did we get here where we are right now today within our economy and things that are happening? Well, first we had COVID, right? We had the whole COVID lockdown. COVID is still giving us a lot of challenges and griefs in other parts of the country, maybe even starting to flex its muscles back here in the United States again. But originally when COVID hit and we shut down the country, did we really need to? Did we shut it down for too long? You know, what ended up happening? Hindsight is always the easiest way to look at anything, right? When you're living in the moment, it's a little bit different of a situation. And so COVID really led us into a lot of different situations of where we're at now, okay? COVID was the start. Policies. Policies also have been giving us a little bit of challenge. There's been a lot of issues on let's go green and let's put green energy into play, which I'm all for green. It's just the fact that we probably still need to maintain some factors on the fuel levels the same until we get the green up to speed, okay? So allowing OPEC to kind of go crazy on fuel prices has really caused a lot of detriment with inflation, trying to transport everything across the country, our utilities, everything is using fuel at this point. And so those policies really became a little bit of a challenge. And so now they're trying to correct some of that stuff where we were using 1 million barrels of our own fuel last month, up to 4 million barrels of fuel this month. But then we're still having some fuel issues globally that's still causing a lot of challenges with inflation. So when it comes to spending and the government making decisions, the Federal Reserve making decisions, I think that when COVID came to be and Jerome Powell made the decision to go through and lower interest rates, that probably was one of the greatest things that probably saved the market and really helped a lot of small businesses stay in business. They started giving loans where they started doing the PPP and started helping out with unemployment. So this really helped with currency and for people to maintain kind of a sense of the way they were living their lives, that things didn't just bottom out all the way around. But I think that when COVID kind of started getting a little bit more of a handle on the numbers and we started kind of coming back to a little bit more of what we were used to doing as far as life, I think they should have probably raised the interest rates back up the same amount that they dropped them. And so that maybe was a little bit of a mistake on hindsight looking now. And so those interest rates are still having a lot of issues with us. The other issue is that they went through and printed a lot of currency. They were actually dropping about $120 billion a month of new printed currency into our market. So they've really kind of flooded a lot of different areas, and there's a lot of currency out there right now. So as they're starting to raise the interest rates, which normally would bring inflation down, it's really not curbing the inflation too much, and it's causing a lot of grief and a lot of volatility, and it's causing a lot of people to really be very fearful. So where are we going from here as far as how things are set up? Well, we're going to see continued inflation. That's going to end up happening. We're going to go through and see higher interest rates. We're already seeing that the mortgage rates and stuff are now over 5.25%. So those are going to continue to keep going up. As those go up, a lot of people are going to not want to sell their home that are at lower interest rates and buy into a house that's at a much higher interest rate. And you're going to have a lot of new people who are not going to want to buy into houses at the higher interest rate. So I think the real estate market is going to really kind of come to a slow standstill until some of those interest rates can go through and be changed. So because of that, we're going to see slowing economy. We're going to start to see a lot more companies sitting on a lot of inventory. We might see a lot more people getting laid off, which is kind of interesting since people having a hard time finding workers to come work, and now they might start to lay people off because of the fact that we have a lot of inventory with a slowing economy, which will start to bring pricing down. And depending upon what the Federal Reserve decides to do with these interest rates, they may go through and either they're trying to do what's considered a soft landing, right, and not lead us into a recession, but it may end up leading us into a recession no matter what. So this is kind of where I think we're going. We're going to have those continued inflation, higher interest rates. We're going to see the slowing economy and most likely head into a recession. So biggest issue here is that when this kind of stuff happens, when we have these corrections, you need to go through and understand it's normal. We're going to have all kinds of flexibility within the market. And here's a big thing. If we didn't have volatility, if everything was just unbelievably perfect, then what would we really invest in? It's the volatility that when we think a company is starting to lose traction and they're on sale, we want to buy them because we think that they're going to go through and take off and actually start doing much better in the future. And so you just need to understand that it's going to move up and down. It's normal. And you need to be able to stay calm. It's very difficult sometimes to fight those feelings that we have, especially when we're watching a lot of the news. And I kind of like to say the news to me is kind of doom and gloom, because that's all they ever want to talk about is the bad things that are really happening. And, it's just really tough, but we need to try and stay calm. Sometimes when you talk to your neighbor, your family, whatever, they're all hyped up and worked up. Try and get them to stay calm, and move on through. Okay. Two things to always remember when we're dealing within the market is that we're in it for the long haul, right? We're in it for the long haul. And if you're not in it for the long haul, then maybe you should take a look and make some adjustments within your investment strategies to make sure that you're in the market based upon the length of time that you want to be in the market. Okay. Next is that we always want to live by this theory, and that is to go through and buy low and sell high. To me, that's actually how I stay calm, is that when things are starting to happen, I always think about the fact of, hey, would I change things now when things are in the mess, or is this the time to be a little bit more aggressive, right? I've kind of lived off of a philosophy, think about this, as with market, when other people are being greedy, I get pretty fearful. And when people are fearful is when I get greedy. See, because things are on sale at that point. I want to charge in and go through and buy them when they're on sale. And I always keep in mind 100% that whatever is going on, it'll pass. It always does. That's what keeps us moving forward, is that whatever situation we're in now is going to pass. It might get a little bit worse, then it might get actually incredibly better, but at some point it will soon pass. Here's a big challenge though. A lot of times people start to think that when things are getting tough, the market is corrected on a downward slide, that they're going to get out. They're going to time the market. I'm going to jump out now because I don't want to ride this train on down to the ground. And then I'll jump back in when things are doing really, really well. It's extremely difficult to time the market. It really is. Sometimes you can make a good decision at getting out, but sometimes you might jump out and all of a sudden there's a really great day and you lose a lot of upward movement. So I a lot of times like to talk to people about maintaining the plan. Stay in the plan, okay? Now, the plan might need to alter and change a little bit, but stay in the plan in times of correction when things are going down. We don't want to sell at that point. We don't want to try and time it and figure out how to get back in, because we got to be right twice. We got to be able to sell at the right time and be able to buy at the right time. And I'm going to tell you that that is really, really hard to go through and do. So 5 things that we want to really look at during these times of market volatility is be patient, right? Be patient. It's going to change. Don't overthink it. Let time just kind of move on through. I'm not saying put blinders on and don't look at it, but just don't overthink what's actually happening. Resist emotional instincts. When things are bad, we try to always turn and run the other way. But in the times of a market, when things are bad, it's the time to be aggressive and move forward. If you have extra money, it's the time to buy when things are on sale, right? Be aggressive in those types of areas. You want to stay diversified. I think that's probably the biggest thing if you get anything out of this. And you may hear people say it all the time, be diversified. Don't just buy into one sector or into one type of a company. You want to be diversified over the market so that you can go through and have a little bit better opportunity with the upwards and downward swings. And if you're still uncomfortable, then go through and sit down and go through and make some decisions at reassessing the situation that you're in, right? What kind of holdings are you in and where are you sitting today? I'm gonna tell you, there is some good news on the horizon though. I personally feel that the economy is gonna be right now we're strong. I mean, we're proving that we're strong. And if we go into recession, it's gonna be pretty shallow. So which means I think it's gonna be pretty short. I don't think it's gonna be, I have to wait 10 years for the market to come back. I think it'll be pretty shallow and the market will rebound back pretty quick from a recession if we and when we go into one. I believe that the Ukraine crisis is going to come to an end. I'm hoping it comes to an end much sooner than later. I hope it's not a major drug out situation, but at some point it's going to come to an end. The inflation is going to go through and start to be quite a bit more tamed in 2023, although it's still going to stay elevated, right? We've moved up to, I think, the next tier in inflation. And so it will go ahead and elevate and be much better in 2023, but still going to be a little bit more elevated. The energy policies, I believe, have to change, and they will. They've started to already change. We're going back to utilizing more and more fuel in the United States. I think most of that policy is going to start to change where we use even more. That should give the fuel companies a kind of a competition to start being a little bit more competitive on their pricing, and that should really help out with the inflation. Also in 2022, the end of this year, we're going to go through and have elections. I'm really hoping that we get into a divided government. And if we have a divided government, that will really ease and slow down on the spending because they can't ever seem to come to an agreement with each other, right? So that'll really ease up a little bit on the spending. So if we can ease up on the spending, we can go through and adjust the interest rates to help out with the inflation, get a grip on the fuel crisis. I think that inflation and everything will start to rebound back and work for us. But I'm going to tell you right now that with all of this volatility going on and all this negative that you're hearing on the news and even the facts I'm talking about here, man, this is the greatest time in the world to be putting money in. This is the time that everything is on sale. As I said, when people are fearful, that's when we go through and get greedy, okay? So you say, all right, I get it, but I'm still not 100% comfortable. Well, if you're not 100% comfortable, then I would say do one of basically two things. Number one is to go through and take a look at your portfolio. And if you have profits at this point, I would probably pull those profits off, leave the initial money that you started your principal in. Don't get out of the market altogether. Hold tight on that principal, because that way, as we have an upward swing, money's there to work for you. But maybe go through and pull some of that profit out, sitting cash until you feel that things are starting to go a little bit positive, and then go ahead and place that difference in and let it work for you. I personally have gone through and done a lot of that. I've pulled a lot of profits off now and gone into a lot of areas where I feel are truly on sale. And as these different things start to change in the future, these will come back really, really strong. So the second portion is, I'm going to ask you if anybody knows who this guy is. I like to show this picture, and a lot of times people say, oh, that's George Washington. Well, actually, no, it's Oliver Cromwell. And Oliver Cromwell was famous for saying, trust in God, but mind to keep your powder dry. And that's the second thing I want to talk about that you can do right now with your portfolio. This comment came when they were going into a battle in Europe, and they had to cross a river. And it was back when they used to load the old muskets with the powder and the ball and the piece of paper. And so he wanted guys to carry their muskets above their head as they had to cross across the river. But he also wanted them to take the barrels of powder and lift them up off of the ground and get them out of the moisture and keep them dry. Because if you go to fire a gun with wet powder, it's not going to fire. Okay, so how does that relate to the market? Well, the other thing that you could do is if you look at your portfolio and right now you do not have profits to pull off, so that you could be a little bit greedy with those profits and buy in, then maybe you should just look at the overall strategy of how you're invested and see if now is the right time to go through and keep your powder dry by maybe adjusting some of your investment strategies, okay? So maybe looking at just reallocating or maybe actually allocating even more, okay? So those are some of the concepts I would think about going through and doing. Last, we'll talk about this wheel, this purple circle of these 5 factors. And this is really a big deal to us. When we go through and work with our clients, we're talking about these 5 areas. This investments is where we're at today, talking about the volatility and what's actually going on. But what's really interesting is that I think a lot of times people will go through and work with different individuals to try and help them on their overall strategy, their overall plan. And they might have a retirement plan at work and they're talking to somebody at work about, and then they might have like an investment advisor outside of work. They may have a CPA or accountant that's doing their taxes for them. They're also going through and maybe using some type of software. Then you got insurance agents that you're maybe working with. They're helping you with different insurance investments and investment strategies on insurance. Then they may have an attorney that's helping them to understand estate planning. And so they're standing in the center here trying to understand all these different factors, like when should I turn on my Social Security and what's the best option for my pension? And none of these entities are actually talking to each other. And that's the big thing about having an actual plan, having somebody that can look at all of these areas with you at the same time and be able to kind of dial them in so they can work with each other. Just an example, if you were pretty strong on income, that you didn't have a lot of shortfall and you're not paying a lot of unnecessary tax, that this money that you're saving would be able to help with that income strive just the same. So these two areas are in line with each other, then you really don't have to be as aggressive in the market. You wouldn't have to worry as much about what's really going on and when should I time and when should I get in, get out and all those, okay? So it's just really helpful to have that type of a plan. And if you're in a situation right now where you don't have that person to talk to, or you don't feel your plan is really strong and you just want to run it past somebody to get a feel for it, you can always give us a call. You don't have to be a client of ours. We're more than happy to have a conversation with you, give you some ideas of maybe where you're at and where you should be going. We would want to get some information from you to try and see exactly where you're at and what you're trying to accomplish. And then we'd be able to maybe give you some advice to tweak that and get you to where you want to go. I really hope that this has been helpful. I hope that maybe it's put a little bit more ease in your mind as far as where things are at, that they're normal and that they're going to go through and change within time. You just need to be patient. Don't sell out when the market is down. Don't get nervous and pull out and then wait till the market starts to go back up and buy back in. That's just the opposite. Selling low and buying high. That's not what we want to do, right? We want to go through and always buy low and sell high. Hey, thank you so much. I hope this has helped.